But right now, we're looking at stock market, really everything, commodities, everything. Everything's up. Some people call it the everything bubble. And you wrote this great article, Asset Prices Are Up, Up and Away. Where are the value buying opportunities? What do you think?
What do I think? This is a book, it's a great book that was written years ago, The Triumph of the Optimist. So it's just American to be an optimist. And so I got some other good news for you. This year I became an American by dual citizenship with Canada and the US. So I'm thrilled about being the greatest nation in the world. And it doesn't matter if there's a fight between this party and that party. It's still the most innovative country in the world. And I'm so proud to be here. And so what happens when we adapt to these things is you want to have first mover advantage. And we say in all our prospectuses, we believe that government policies are precursor to change. Thus, we track monetary fiscal policies, and you can say follow the money, where the money's going. And what you're seeing is $17 trillion between the EU, the US, and China to fight an invisible war, this invisible virus. And this is showing up in a huge asset inflation, which is then going to trickle into what should be a CPI number. But I've written about this last year, and I have a short clip on it, fake CPI number. It's not capturing energy or food. And inflation today came out and just shocked everyone.
That's absolutely true. I mean, you look at home prices, they're skyrocketing. You look at lumber prices. You know, we had a storm knock down our fence, and I'm talking to the contractor, what's it going to cost to replace the fence? It was triple. I mean, it's crazy what's going on across the board in inflation.
So the first mover advantage is buy now. You want to buy a car? Don't wait till next year. Used cars are up 25%. There's no rebates now. And so why? Metal prices that we're seeing up today are going to be pushed into the system, and 18 months from now, cars are going to have to go up 70%.
Wow, that's crazy. So you got a chart in your blog. Everything is up except precious metals. You show energy, industrial metals, agriculture, livestock, and precious metals just haven't moved that much. What's going on with that?
That's the big buying opportunity. It's always sort of bizarre when it happens, and you've got to be so suspect about governments trying to hold gold down. I believe that the G20 cartel of central bankers and finance ministers they're now on synchronized taxation. Even Yellen's coming out with synchronized taxation and regulations. Before it was trade, if you go back 20 years ago, and now it's another issue they're dealing with. Keep gold down allows the sort of the printing of money to say there's not inflation, but it's too late now. So I'm a big believer that gold is just going to have its pop. 10-year government bonds, if you can borrow a cheap mortgage, get it done now. You can borrow at various organizations like in Texas, at credit unions for less than 3%. It's a smart move because real inflation is running 10, 11%. And so I think that that's your first mover advantage. Real assets, gold will come back. It's just historically. This century, though, gold has outperformed the S&P 2.5 times. 2.5 times. So that means it has outperformed 80% of the time. So I think every time you get these sell-offs, you make sure you maintain your 10% positioning.
Yeah, no, gold has been phenomenal, and I've been in the investment world a long time. I've worked with John Templeton. We always said you keep at least a hedge in gold. It's just not moved as much, but it hasn't lost anything, and it's sitting there. I'm like you. We did a show several months ago titled "Things Have Changed," and really they've gone back to 1970s policies in a lot of ways, and I expect that we'll see 1970s outcome with one minor exception.